So it's an interesting because Carlyle actually in the last few days made some investments in China. So it's an interesting time there in light of what's happening with the stock market. How do you view China? Will you be making more investments there?
We view China as the greatest place in the world to invest in the emerging markets, certainly, and outside the United States, one of the most attractive places we could put our money. We are the largest single private equity investor there. We've done 88 transactions and put about $6 billion of equity into China over the years. So it's been very profitable for us, and I think it's been good for the Chinese people because we've improved some companies and ultimately Chinese economies benefited from that.
Okay, so Carlyle Group. This interview is taken on July 2, just before this private equity bubble got bursted, and what happened with them. So they started their company in 2012, and they opened up with $21. They are below where they started. They lost all the money that they had. If you would have invested in this company and you would not have exited at the right time, it's game over for Carlyle Group. We know that this is a private equity bubble, especially in the emerging markets. So companies that have invested in private equity, especially pertaining but related to the emerging market, China and India, those are going to see doom. Now my thought is that, is this good enough, or they are going to go completely busted in the next few years? So Carlyle Group is focused on private equity, and they have a huge investment. They have 193 billion under investment, and China is one of their favorite among the emerging market. So this correction just happened. The other company that I would like to talk about, you might be thinking that this happened with everything. No, this does not happen with everything. If you look at the S&P, the S&P before the private equity bubble, if we assume that the money pumped into the system went in the same proportion in S&P and private equity, was if you were assume somewhere here between 1500 to 1700, it did not went back, whereas the private equity went back to their Jan 2013 levels. So private equity went back to, say, here, this region, 1500, but the S&P did not. And this is clearly a private equity bubble. I'm not sure whether they are going to go completely bankrupt, because all the models which they have been using in private equity, I doubt that most of the times the way in which they have valued that, it's not publicly traded in the market. So only companies that are going to take it are companies like Carlyle Group. So let's see what happens to them in the next couple of months. This is a private equity bubble, and uh, you should be very careful in investing. And if you have some money in private equity, it's still not very late to get out of that.